Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
Good morning and welcome to Bazaar Morning Call. I am Anuj. We have full house today. We have Sonia back after celebrating her and her son's birthday yesterday. And of course, Surbhi is also here. Let's see how the market moves. We are very close to that 11,650 crucial support mark, and the broader market has seen quite a bit of decline. Good morning, both of you.
Hi, good morning, Anuj. Hi, good morning, Surbhi.
Sonia and Anuj. And belated happy birthday to you,
Thank you. Well, for the market itself, Anuj, I mean, although the headline index may appear like it's holding on to that 11,650 mark, it's the broader market fall which is really disconcerting, right? I mean, would that continue to be a spot of bother as we head into the next few trading sessions?
Yeah, Sonia, everyone knows the kind of sport fanatic that I am, and I relate sports and markets quite a bit. For all of us right now, the three tennis legends are Federer, Nadal and Djokovic. For the kids of 80s, it was Edberg, Becker and Ivan Lendl. So I think the news that we have is that Boris Becker is being forced to sell some of his trophies. He's auctioning his trophies to pay off the debt. I don't know about a lot of people, but there was this little boy inside me who cried yesterday. And I know a lot of my friends who would have done that because, for a lot of us, our childhood was about Edberg and Becker matches. So the reason I'm bringing that up is that in some way, markets and sports are related. This is the poison of debt, right? Especially if you can't service that debt. That is the important thing. Debt itself is not that big a crime, but if you can't service that debt, then it's a poison. And why I'm relating that to is, what happened with Emami yesterday. And the way, in fact, a lot of companies, a lot of Indian companies are now selling family jewel to pay off the debt. And that happens. It's a case of, sometimes it's a case of bad luck. And sometimes it's a case of
also a case of bad timing, right? I mean,
exactly.
when the industry is so challenging, I guess you got to sell your key assets to sort of repay them.
Exactly, and we have observed some of that from close quarters. So these things happen. But by the way, SBI MF has averaged down Emami. That's a cardinal sin in investing. But let's see if that's successful. The reason I brought this up was that because we're going through a bit of a sort of flush out in the mid caps and the broader market, quite a bit of that. Because of that, a lot of good quality stocks are also suffering. That's where perhaps the opportunity is. But my sense is that you should give wide berth to stocks where the promoter pledge and the inability to actually sort of service that debt are real. There are companies like Apollo Hospitals where clearly the management has a plan and is able to take out, is able to remove the pledge. And there are companies where it's clear, it's apparent that, the overall burden of debt is just way too much. We discussed Everready 2 months back. So
there are so many cases, Everready, Jain Irrigation, companies selling prime assets. I mean, we saw the Piramal deal just take place as well.
Exactly.
Of Shriram.
Piramal is another example where, you're selling, like that day they sold Shriram Transport stake. Now they're selling Shriram Capital stake. At these valuations, you're selling stake. Obviously, it's telling you that there's a bit of a malaise in the system.
Well, you know what? As a watcher and follower of personal finance, I'll tell you that it's very easy to blame it entirely on market condition. But debt comes it's a very personal issue. It's an issue of self-discipline as well at some level. That's a different debate. And I do want to get back to the pledge share issue in just a moment because, hang on, because tighter rules are coming on pledge shares. But before we get to that, Anuj, just on today's setup, considering that this market has very little good news to go on, and that level is getting tested repeatedly, 11,650. Are there chances that perhaps it could break this week?
There are chances it could break and look like a breakdown for the market, but which perhaps is a false breakdown. I think what's happened in this market is this weekly options has distorted market picture, way too much. There's too much money involved in weekly options. It's become too much of a speculator's play. And if you see if you see, for example, especially in expiry week, the way and now every week is expiry week for index. So the way some of the 100 points out of money calls and puts move, it's very bizarre. So what's happened right now is we are in a bit of a make or break zone. the last our rally yesterday that we spoke about, Surbhi, that prevented the breakdown. Otherwise, it looked like the breakdown was happening yesterday itself. So 11,625 is the series low. Normally, you test the extreme of the series on a Tuesday or Wednesday by penultimate day. So today or tomorrow, there's a distinct chance that perhaps you test 11,625 or you break it. But would the break of that mean the market's broken down at index level? Perhaps not. We're still defending 11,650 on closing basis. There's still budget around the corner now, in a week's time. So there's a possibility, and once the expiry is over, that the market starts a bit of a counter trend move. The other thing which is interesting is, if you look at the haloed stocks, some of them are beginning to lose their sheen. Axis Bank, Reliance, these are two stocks which are really holding the index. Axis, especially for the bank nifty, that's already down 6%. Reliance is down 5%. Britannia is down 4.5%. Kotak is down 3.5%. The overall breadth is quite poor for the market. We are on pace for the worst advanced decline in almost 1 year. My sense is, for markets to bottom, the two stocks that need to fall now would be Titan and TCS. These are two stocks which are still very close to all-time highs. In fact, Titan is making life highs every day and is the most expensive stock. So that perhaps will indicate some kind of capitulation. We are very close to some kind of index capitulation. In the broader market, something has to change, because the market sentiment is so weak right now that it's a this is, like we discussed, there's a trust deficit.
Absolutely.
3 years back, could you have thought about it, that Emami would be a stock which would destroy, your wealth by 40-50%.
Yes.
You couldn't have. So that's the trust deficit that you have right now, and that needs to build for the broader market.
And I think that's been the biggest learning lesson over the last 1 year in terms of mid-cap investing as well, that, not just how the company is doing fundamentally, not just the company's balance sheet, but the promoter's own strength, and whether that really is standing out or not. Now, here's what I'm coming to. 27th of June, which is Thursday, is SEBI's next board meeting. And it's been widely reported that SEBI is going to look at strengthening pledge share rules. Now, a couple of things are being spoken about. One is that the definition of encumbrance itself is going to be widened. It's going to be made actually fairly loose. Some of the reports are talking about how the new definition might include any restrictions on free and marketable title to shares. So it can't just be, it was a loan against share, it was a lien against shares. It's a wide definition. And if this definition is triggered, then within 7 days, if the total pledge is crossing 20% of the company's shareholding, it needs to be disclosed. Short point that as the regulator also tightens its noose around these things, because a lot of deals like the Z deal has come under heavy scrutiny about how you declare everything later, then you get into an arrangement with your lenders, mutual fund lenders. Perhaps we will keep seeing more and more disclosure, which means that perhaps more and more names will keep coming out. The system gets cleaner in the medium term, but in the short term, we know what that does to stock prices. So
a lot more skeletons perhaps tumbling out of the closet. By the way, there is, of course, a risk aversion across our markets. I mean, look at the prices of gold. Gold is at a 6-year high as we speak, has crossed 34,000 rupees. Just a clear indication of how there is a bit of risk aversion in the system.
And
definitely.
you know what? I've always maintained, call me old school or whatever, you should always have some gold in your portfolio, and physical gold.
Yeah.
ETF, etc. I don't, consider physical gold. You should have some in your portfolio. Every year you should add.
For times like these, perhaps, when there is this wave of
because that's the real asset at the end of the day.
All right, well, look at that, 34,000, almost 35,000 now on gold. But, well, on that note, let's get back to our first love, which is equities, and tell you what our wise experts have to say. As we head into trade this morning, Harold Vanderlyn says HSBC now expects an interest rate cut of 25 basis points in September and another 25 basis points in December. He says this may create space for more accommodative monetary policies across Asia, especially in the ASEAN region. In the past, he says Fed cuts have provided temporary support to Asian equities, but after an initial rally, concerns about growth saw the gains reversed. In anticipation of the Fed cuts, Harold believes it is time to become less defensive in the coming months. He remains overweight on the Indian markets.
Okay, let's get you some money market views. Bhaskar Panda of HDFC Bank says tensions in West Asia are growing as the US President mulls further sanctions on Iran. Global oil prices have been elevated, gold has risen and dollar index has taken a dip. All eyes are on the outcome of G20 meeting, especially between President Trump and Chinese Premier. The USD INR has taken a cue from Asian peers and has traded around the support of 69.28. He expects the pair to trade in a range between 69.30 to 69.5, given the global background. That's a very small range actually.
It is and will continue to remain below that 70 mark, at least that's the expectation. On the Indian benchmark yields, Bhaskar Panda says that they have been benign in the hopes of lower consumption, inflation, despite monsoon woes. The recent rally in yields may peter out. For today, he expects the 10-year benchmark bond yields to trade within a range of 6.8 to 6.85%.
All right, let's go across to Mangalam and take a look at the world view.
Well, cues of range-bound consolidation and choppiness in a narrow range is what we're seeing across the globe. Case in point, Wall Street, where we saw a mild dip on the S&P 500, a little more on the Nasdaq, as well as a green stop for Dow Jones itself. Why is that? Because now most of these indices are trading water ahead of the Trump-Xi meeting in Osaka on Friday, where trade talks are likely to be discussed, and hopefully there could be a bit of a deal or no deal. That is something we'll know only on Friday. European markets as well across the Atlantic, we saw the German index underperform, and that was primarily on account of Daimler. Daimler was lower by around 4% as the company cut earnings guidance for 2019, and not just that, as a result of which we saw most of the auto stocks in Europe take a bit of a nosedive. At the same time, the street is also watching out for what takes place between US and Iran. US has imposed some fresh sanctions on Iran, as a result of which we saw Brent steady itself around that $65 per barrel. So let's see how that pans out. Most of Asia opened mixed and now has seen a bit of a sell-off. So we have the Shanghai as well as the Hang Seng at the low point of the day. The Korean index is the only one which is holding its head above the water because of chip makers, as a result of which the SGX Nifty currently indicating a slightly tepid start. Earlier it was about 10-12 points in the green and now has moved around 7-8 points in the red. Back to you.
Okay, Mangalam, thanks a lot for that. Yes, the market's become a bit weak. Yesterday there was this last hour pullback from the recent support marks. But let's move on and get you some global opinions. Citi's Stephen Whiting says the bond market is pricing in Fed easing and adds that trade risks remain an overhang on the market and corporate profit.
We have a sound economy, even globally. We're fortunate to have low inflation this late into an economic recovery cycle. And typically, again, if we had high and rising inflation, it would show that we're living beyond our means. We need to have a retrenchment. You don't see that. But we have binary risks around policy. The Federal Reserve was one thing that knocked the American economy down last year. It presented a risk to the world, but the other thing is still very much unresolved, and that's trade sector risks. And that can be a very big issue for financial markets, for corporate profits, if not for economic performance. The bond market is predicting Fed easing, and it's an open question, again, as to what it takes now for the Federal Reserve to change its tune in terms of monetary policy. Fed Chairman Powell said that it could be preventive medicine, right, when asked about a 50 basis point easing at the coming meeting at the end of July. So it's very plausible, again, that the Fed's whole reaction function has been to ease almost regardless of how the data unfold. Fed might be just telling us here that they're going to act on the fact that inflation's exceptionally low.
All right, well, one big worry for this market has been the slow onset of the monsoons, which is crucial, as we know, for agriculture and the overall economy. The Met Department now tells us that rainfall across India has been 37% below normal so far this month versus 44% last week. So there's been a rainfall deficit all throughout June. That's basically the point. The Met Department also adds that eastern and southern India have been covered by the monsoons already, and conditions are now favorable for the rains to advance into central and western India this week itself. However, the deficit has impacted sowing patterns for certain crops across the country. Sowing of crops like cotton, rice, soybean, corn and pulses have been delayed by a fortnight. So it's a scary situation, especially from an economy as well as a market standpoint. So here is GP Sharma of SkyMet on what we can expect in the next few days and weeks on the monsoon front.
The monsoon definitely has picked up a pace in the last 3-4 days, and that's how the deficiency has dropped now from 44% to about 37% today. But then it's going to go a little weak again after about 24 hours or so. Once again, from about 1st of July or so, fresh system is likely to form, and that should give us further rains. Climate had issued an advisory to delay the sowing by at least about a fortnight or so. And now we have advised that with this spell of rain, which was there in the last about 3 to 4 days, wherein monsoon has now covered more than 50% of the country.
Okay, well, we're still waiting for it to hit Mumbai big time. It's already almost the end of June and no monsoons just yet. But we'll take a quick break on that note. Our list of top 10 stocks lined up. In just minutes from now, our entire team will be here with us, so do stay tuned in. Hi, welcome back. It's been challenging times for our markets actually. Although we've been holding on to that 11,650 mark, there's plenty of damage beneath the surface, and the SGX Nifty is indicating that today could also be a bit of a struggle. In fact, a lot of Asian markets are a bit under pressure right now. There is this, Trump-Xi Jinping meeting that is scheduled to take place, so investors are awaiting the outcome of that. It's generally quite an action-packed meeting or action-packed comments from both parties, so let's see which way things go. But for now, our research team is here to give you the list of top 10 stocks as we head into trade today. Here they are, our entire team. Anuj, what are you looking at?
Sonia, this is not for the day, but these stocks have come into my list many times over the last 3 or 4 months. I think there's the two Tata Group stocks which are coming out of multi-year bear market and are now getting into bull market of their own. The first is Indian Hotels, and that's the one which actually is coming out of almost a decade-old bear market and is now beginning to make some kind of move. And the other is Tata Global. That's also a stock where we saw a lot of pain, but now that stock is showing distinct signs of breaking out, and it's one of those stocks which when moves big, and you can already see it. But the point I'm trying to make is, again, you don't want to chase stocks, but there are some stocks entering a bull market of their own, and it would be good time perhaps to own some of these.
Okay, all right. So we'll watch out for these two. Let's move to the others on our list. Nimesh, you're watching out for SBI Life as well as L&T Tech. Why?
Yes, sir. So now in both the stocks, there's going to be an offer for sale from the promoters, which is going to open today. In terms of SBI, the foreign partner, which is PNB Cardiff, that's going to sell stake via OFS for institutional investors, it opens today. The floor price set is at 650 rupees per share, which is at a discount to yesterday's closing price of 710. And remember, even in the month of March, they had sold 9% stake to Carlyle Group. So they have been, pairing stake in SBI Life, and there's going to be another OFS, which opens today for institutional, and for retail investors opens tomorrow. Same is the case with L&T Technologies as well. In that case, L&T, the parent, is selling close to 2 lakh shares. It's a very small OFS, so to speak. But yes, there will be a selling of 2 lakh shares to institutional investors. Even there, the floor price is set at close to 1650, which is at a discount. So both the stocks should be marginally in red. But for L&T Tech, given that it's a small OFS, may not react big. But yes, the trend of promoter selling stake in companies continues with 2 OFSs launching today.
Okay, well, thanks a lot for that. Piramal, it's been on our radar for the last 1 month after Ajay Piramal has been slowly exiting a lot of his Shriram Group investments. The latest we hear is that he's evaluating the feasibility of a stake sale in Shriram Capital now. Abhishek is here to give us the lowdown. Abhishek?
Well, Sonia, they have been evaluating opportunities to encash themselves from all the investment that Piramal holds. So, as you mentioned, Piramal Enterprise is, finding a suitable buyer for its 20% stake in Shriram Capital. Now, just to alert our viewers, Shriram Capital is the holding company of the 2 listed entities, that is Shriram Transport as well as Shriram City Union Finance. And Piramal had purchased 20% stake in Shriram Capital for 2,014 crore way back in 2014. And last week, they sold 10% in Shriram Transport itself. Now, news report also suggests that Piramal Capital and the Housing Finance is looking to raise over 400 million via ECBs. So, the companies are in talk with a group of bankers that helped in syndicating the offshore loans. Now, CNBC-TV18 has not verified this news report independently. However, all of these do suggest, Piramal is in fundraising mode. Back to you.
Oh, yes, Abhishek, thanks a lot for that. I think you should simply ask yourself this question. You're selling these stakes now, especially in both Shriram Transport and in the holding company. So what kind of valuations are you getting? And this is the money that Piramals had invested after they had got that windfall. So obviously the kind of yield that they would have got is
And Ajay Piramal is known to stay with his investments for at least a decade. I think this is just less than 6 years ago when he invested in this
It's telling
group.
you that there's stress in the system.
There's stress,
Simple as that. But anyway, let's move on. Nigel, there's an interesting report from CLSA on steel.
That's right, Anuj. In fact, CLSA, they continue with their negative stance on steel. They have a sell rating both on Tata Steel as well as JSW Steel. The few factors that they've highlighted is steel prices are likely to start moving lower. That's what's going to be a risk to their earnings going ahead. And they're saying these stocks are not trading cheap at current valuation. So they have said that yes, steel prices have corrected, but in fact, still the domestic prices are at a bit of a premium in comparison to imported steel as well. And they're saying that iron ore costs that have moved higher, and that's what supported steel prices, that's likely to fall in the second half of this year or from the third quarter onwards. And that's what will further, weaken steel prices going ahead. In terms of valuations, they say both JSW Steel and Tata Steel are trading at around 6 to around 7 times, while the global peers are trading at less than 5 times EV upon EBITDA. But Credit Suisse, they have come up with a contradictory note. They're saying that, there are some harsher steel production, norms that have been tightened in the province of Tangshan, and that's what could support steel prices in the near term. That is for the next couple of months, because that could take close to around 5 million tons out of the system. So they're saying two factors. One is lower steel supply from China. The second factor is higher raw material costs. That's what will support prices going ahead. And for Indian companies, they expect the spreads to hold steady. That's why they continue to like stocks like Tata Steel, JSW Steel, and JSPL.
That's an interesting bull versus bear, Nigel. Thanks for that. So CLSA versus the CS call. But for now, let's quickly move on and just revisit the story on Emami, that 10% stake sale. Some more details now, Mangalam?
Absolutely. So, as we know, the promoter sold 10%. The buyers, they said yesterday to us on the channel that it would be domestic funds, and turns out, yes, SBI is the one that bought about 3% of the 10% that the promoter sold. The remaining 7% is not being disclosed yet. More importantly, there's a note from Citi this morning. They've taken a sharp target price cut on Emami from 430 plus to around 340 odd. And while they still remain buyers, they believe that the promoter group debt concern is something that is looming ahead. Going forward, the key re-rating points would be if the promoters can go ahead and sell their cement business, real estate business, hospital business. But these are things that, the street mostly knows about. But will that happen in the next 6 to 8 months is something that everyone will be watching. More importantly, what happens to the stock today? Because the last time when they sold 10%, the next day the stock started moving higher because the street believed this would be a one-off. Now, over the last 3-4 months, the promoter sold 20% stake. Is this the last of all the stake sales or not, is something that the street will be watching out for. The promoter saying that this is the last, notwithstanding.
Okay, Mangalam, thanks a lot for that. Yes, that's what the promoter is saying. But you know what, like I said, cardinal sin in investing, averaging down. Most of the wealth that I have known people make is when they average up and not average down. But Anisha, there are some other stocks in news?
Oh, well, yes, Anuj. Let me start with Welspun Corp, wherein the company had announced their intention to buy back the shares, and now we know that they're buying back 390 crores at a value of 135 a piece versus a market price of around 140. So that might just see a bit of sentiment downtick in trade today. The record date has been decided as 5th July. Moving on to Quest Corp, wherein the board has approved raising of funds of up to around 51 odd crore rupees, and they're also expanding the scope of services to Amazon seller services, and that might be in focus. Eris Life might be in focus because the board is looking to buy back shares, and they will decide the same on July 3rd, so we'll watch out for that particular meeting. And lastly, keep an eye out on Suntech Realty. They have issued commercial paper to the tune of around 35 crores, a small sum, but given the fact the liquidity crunch in the market, this should be taken positively, and the rating action was also positive, so maybe a green tick on that one.
Okay, well, Anisha, thanks a lot for that. That's a lowdown on all the stocks that you need to prepare yourself with as we head into trade today. In case you missed out on any of them, here's a quick recap. Stocks with positive news flow today is Indian Hotels, Tata Global Beverages, Piramal Enterprises, Quest Corp, Eris Life and Suntech Realty. While stocks with negative news flow, there's L&T Technology, SBI Life, Tata Steel, JSW Steel, Emami and Welspun Corp. But how do you approach the markets today, considering that there is a bit of a challenge as we kickstart trade? Plenty of technical advice coming through with Ashwini Gujral. So
welcome back. Well, the SGX Nifty is indicating a bit of a volatility, but I tell you something, this is nothing in comparison to the kind of volatility that you saw between 130 and 330 yesterday. The market in the end ended a bit flat, but It was all over the place yesterday, both on the Nifty and the Bank Nifty. And of course, this is expiry week as well, the monthly expiry. We have Ashwani Gujral, Sudhanshu Sukhani and Mitesh Thakkar now joining us with their technical advice for the day. Good morning, Ashwani. How's the setup looking like? The Nifty again took support at 11,650. You think it's about to break, or is there a trade to buy around this level?
Well, good morning, and both Nifty, Bank Nifty are in extremely narrow ranges, and the other issue is that massive bar we made on Thursday, slowly the markets are taking that out on the downside. So there is no follow through on the upside, but on the downside we are closing lower and lower. Now the idea is that early morning you get 11,720 thereabouts. Those would be good levels to sell into, but overall, given market breadth, etc., it looks like finally 11,650 will get taken out. Now whether it happens pre-budget, post-budget, I would think it will finally happen. Similarly, Bank Nifty range 30,540 thereabouts to about 30,780 to 800. So again, there is very little follow through, and on rallies, chances are the market is more likely to give up upside rather than find consistent support. These rallies that we have last half an hour, they are basically more treacherous than should be used to make money. So the idea should be to keep selling the rallies.
Okay, keep selling the rallies. Well, perhaps that may be a good idea today. Just look at what's happening in Asia, because the Hong Kong market is now down over 300 points. It's at the low point of trade, and a couple of other markets like Shanghai also quite tepid, down over 1%. Not looking good. Some uncertainty ahead of that Trump-Xi Jinping meeting. Sudarshan Sukhani is also joining us. Sudarshan, hi, good morning. This 11,650 mark is held for now, but do you think it's just a matter of days before which it gets taken out conclusively on the downside?
Yeah, hi, good morning, Sonia. See, for the last 6 days, except for Thursday when the market closed at its highs, for the other 5 days, the Nifty has been closing almost near its lows, including yesterday. That tells us that apart from Thursday, the bears are slowly gaining control of the market for the short term. So my view is that we should be looking to go short in this market for the Nifty and the Nifty Bank, just as a matter of precaution. Sell if and when, and that's an if also, when the Nifty breaks 11,670. 670 was yesterday's close. Once we take that out on the downside, I think there is confirmation that weakness is real and we should be going short. And for the Nifty Bank, sell below 30,500. I wouldn't buy today.
Okay, so not looking to buy. That's Sudarshan's call. Mitesh, good morning. We've had a lot of volatility in the last hour yesterday. How are you approaching the action today?
Good morning, Survi. I've been advocating the same level, 11,670 as the key downside support area. And yes, the structure is weak, so there is a risk of downside breakdown happening. And once we break 11,670, 650 zone, I think immediately shorts can be taken with a 30-point kind of a stop. I think 11,580 should be the next first target, and possibly 11,430, 450 could also happen. So I think there's a good chance of downward drift, but let's see if the support breaks. And I think once it breaks, then I think you should see some more supply pressure coming in.
Okay, you know what, the broader market is resembling index of almost 10,000. That's the problem that we have right now. The index, of course, we're still debating 11,650. The broader market is already at representing 10,000. Ashwani, what about individual stocks? What's on your list?
Was a buy with a stop of 626, target of 650. BEL is a buy with a stop of 110, target of 121. Ujjivan is a sell with a stop of 291, target of 278. JSPL is a sell with a stop of 145, target of 132. And GSFC is a sell with a stop of 94, target of 86.
Okay, Sudarshan, you have 3 buy calls and 2 sell calls this morning. Take us through the list.
I have, but they are all mid caps and they have different reasons. They are not part of the general market flow. The market remains mildly bearish. ACC had a small consolidation and broke out yesterday, similar to Ambuja. If the Nifty holds, then ACC is a buying opportunity. Godrej Industries had a very wide range upswinging bar yesterday. A big breakout. So again, if the markets are choppy, they don't break down. These are buying opportunities. And finally, Canara Bank. I have talked about Canara Bank earlier, how it's building a base and it's already broken out of that. 3 mid caps, but you have to see the context. They are worth buying only if the Nifty is holding on. Motherson Sumi and Tata Steel are both short sells. They've rallied, very tepid rallies, found significant resistance and started coming down again.
Okay. Mitesh, let's look at your stocks as well. What would you be advocating today?
I have a mix of buys and sells, and Adani Power, I think the intraday charts are looking very positive, so would be a buy there with a stop at 48. Look for targets close to about 54. I also have a buy on Container Corporation with a stop at 540 for targets of 575, and 2 sell calls, JSW Steel and MGL, both the candlestick pattern is quite negative, so could see downside continuation. JSW Steel would be a sell with a stop at 263 for targets of 246, while MGL would be a sell with a stop at 846 for targets of 800.
Okay, Sudarshan, I wanted your thoughts on a couple of these stocks where we've started to see a bit of a decline. One is Axis Bank and other is Reliance.
Well, Axis Bank has been underperforming the Bank Nifty. There must be a message here. On the charts, I think it's coming close to support. So it will follow the Nifty Bank. It's not bearish as such. Reliance is a very different story. I have been very upbeat on Reliance and we've caught all the up move. Now this distribution, it's a distribution, it's not moving anywhere, and there are signs that it is actually distributing. That's worrying. So as of now, Reliance is not a buy for anyone.
Okay, well, one thing is common between all 3 gentlemen. All have sell calls on metal stocks today. Ashwini has a sell on JSPL, Sudarshan has a sell on Tata Steel, and Mitesh has a sell on JSW Steel. So perhaps that's the pocket where you have to be a bit cautious on the you can perhaps make money on the downside. But on to an interesting conversation. As Pidilite celebrates 60 years of success, Shireen caught up with the minds behind the Indian adhesive giant Fevicol, Chairman MB Parekh, MD Bharat Puri and ad man Piyush Pandey, and began by asking about the story behind the iconic brand. Listen in.
I came into the picture only around the late 80s on the creative side.
Right.
And I was actually asked to work on this brand by my seniors who said, give him all the Indian type boring brands.
Indian type brands.
And probably what I call it now, I must have felt that way, that B2B is not boring to boring.
Yeah.
And I found some very receptive, very down to earth, very focused people on the Pidilite side, and I think they gave me the license to fly. And
so what was the brief to you? I mean, as I pointed out at the start, this is nothing to do with the sexy world of FMCG that Bharat Puri gave up on to join Pidilite. This is not something that you can eat, wear, show off, brag about. Yet, it is one of the most iconic, memorable brands in India.
I think the first brief was actually about a radio spot for a brand called Pidilite, which has got 2 of the tubes. And I went and made a radio spot. They loved the radio spot and they said, why didn't you make a film of it? I made a film for Pidilite. And then when I showed the film, I was very nervous because everyone first clapped and then said there is a problem. And then his father, Mr. B.K. Parekh, said to me, Piyush, there's a problem. This idea is too big for a small brand like Pidilite to do justice to it. Take the money and go and make it again for Fevicol. And rest is history.
Mr. Parekh, I want to put that question to you. Part of the Fevicol story and the Pidilite story now is also about what you're doing on the inorganic side, what you're doing on the joint venture side. So how is that tying in with the fact that you've been able to create this iconic Indian brand that has resonance? Who would have ever imagined that Prime Minister Modi would, in his meeting with the Japanese Prime Minister, post that meeting, talk about the fact that the bond we share is stronger than that of Fevicol. I mean, who would have thought that Fevicol would have made it into a prime ministerial speech?
Yeah, that's amazing, yes. So
how much of what we can now see as far as the future is going to be about global growth, about global markets, about acquisitions, about joint ventures?
No, we see in the process of identifying opportunities, sometimes we find segments where we believe that we should be there as a pioneer, but we don't have the technology or the experience to do it in a short time. And now, compared to earlier, I think that things are moving faster.
Right.
And we can't take as much time with other products as we took with Fevicol. So therefore, we believe that we should spot joint venture partners and get on with moving into categories which are again falling into that pioneer space.
Yeah. So Bharat Puri, let's talk a little bit about the pioneer category, because that is what people who are looking at valuations are keen to understand, that if it's priced in at this level, then what can we expect in terms of future growth? So where do you really see the new areas of opportunity where you're not today, that you expect to foray into, the categories that you hope to want to grow further from here on, and how is it going to happen? Do you see a more aggressive push on the inorganic side?
See, two things. One is, if you look at our portfolio, we broadly define our portfolio into three categories. Core categories where we already have a market leading position. We are largely growing the category via, growth in the economy, premiumization, innovation. So things like a Fevicol, a Fevikwik, high market shares, entrenched position. These we'd want to grow at 1 to 2 times GDP. We then have a set of growth categories where, frankly, we are competing against non-consumption. Take waterproofing. 7 out of 10 homes in India have a waterproofing problem. 3 out of 10 address it. There, the job is, frankly, to make that 3 into 6 rather than worry about the 3 who are doing it and try and get share out of those 3. Now, there, obviously, we must grow 2 to 5 times GDP. And so whether it's that, whether it's ICA Pidilite, whether it's emerging India, these are all what we call growth categories. And very simply, pioneer categories are tomorrow's growth categories. We just bought over India's largest floor coatings company, high-end floor coating. It's called CIPI. Now, CIPI is the provider of these high-end coatings, whether it be for parking lots, factory floors. But we're also excited, Shireen, we see this as an opportunity. Take a city like Mumbai, restaurants, hotels, hospitals, all of them currently using tiling as floors, and that's frankly not a recommended solution. Again, it's a pioneer opportunity. It will take us a number of years, but it fits into our model. Like this, whether it's tile adhesives, we have a whole range of pioneer categories. Obviously, some of them are confidential. But over time, we'd like our portfolio to be half core and half pioneer plus growth.
Okay, that's the vision for the next 60 years. So you can watch that entire show. You can watch snippets of that, 60 years of Pidilite, all day today only on CNBC-TV18. Well, let's take a quick break on that note. We still have about 20 minutes left for the pre-opening rates to kick in. Prakash Devan will join in with some long-term.
Welcome back. So we have mixed trends across most of Asia. The SGX Nifty, as you can see, is completely flattened out as of now. Let's see which way our opening is. Right now, it's time to focus on a couple of more trading ideas. We have Shubham Agrawal joining in with that. A couple of F&O trades coming your way. Shubham, good morning. What stocks are you focusing on?
Hi, good morning. So basically, if we look at the overall market, the market seems in a consolidation which might continue for some more time. So both opportunities, long and short, exist. So the first stock idea is a buy call on L&T. And if you see the entire sector performance and the stock performance has been quite encouraging. And after hitting the all-time high, it looks like that there's a temporary consolidation. And we expect one more leg of upside to be seen in this expiry itself. So a bull call spread can be initiated at the current level. The trade would be to buy 1540 call option 1 lot and sell 1 lot of 1580 call option. The net spread is at 11 rupees 35 paise. The target for the same will be 20 rupees and the stop loss can be maintained at 6 rupees. The second call is a buy call on PFC, and there's some interesting data point on the options front. Because if we see there, technically there is a continuation pattern that has been formed, and yesterday we saw a breakout. And on the options front, we have 130 strike call option, which is heaviest in the stock, has closed around that area, which is an area where generally we see an OI breakout. So it looks like that today could be an encouraging day for PFC. So a simple long call can be initiated. 130 strike call option can be bought for a target of 5 rupees and a stop loss of 1. And lastly, one sell call on Jindal Steel and Power. And if you see there, very similar setup, we have the highest put at around 140 and the stock is trading around that level. So very good possibility of we witnessing a breakdown. So 140 put can be bought for a target of 5 rupees and a stop loss of 50 paise.
Okay, Shubham, thanks a lot for all those trades. Let's move on then and address the market fundamentals. Prakash Devan is now with us. Prakash, hi. Good morning. Your thoughts first on a couple of these, interesting stocks where we've started to see some bit of bounce back. Let's in fact start with UPL. What's your call on the stock?
Yeah, so I think what's happening is that this whole debate on quality and corporate governance, promoter pledges, leverage, brought some of these companies which had kind of risen pretty sharply, and UPL was one of those. From January, if you see YTD, we already had a little bit like a 30% kind of an upside. The correction seemed imminent. The market was waiting for a trigger, and when the tsunami hit the markets for some of these doubtful names, a lot of these overripe stocks also kind of led to this correction. But the fundamentals catch up, and that's exactly what's happened to UPL. It's fundamentally strong. It's in a great phase. And I can tell you globally, the kind of acquisition, apart from, of course, the Arista acquisition, there are lots of other drugs, chemicals that are going off patent this year particularly. And if they were to acquire those, the kind of repertoire they will end up owning for the cost that these things are available, especially in Latin America and Europe, it's going to be fantastic. So I think it's in a very steady state. It will probably see some momentum come back, and you could see another 10-15% upside very quickly.
Okay, Prakash, hi, good morning. I wanted your thoughts on how one should approach Emami now after this whole issue. I know you've spoken about it in the past, but it's the fundamentals don't seem to have a problem. It's just that what's happening with the group debt and the fact that the company is selling their family silver is something that's concerning the street. But for an investor who is perhaps stuck with it for the longer term, should you worry?
Not really, because see, look, let's look at what is the reaction to. The reaction was to the very clear acceptance, Sonia, that there was an issue, there was an overhang on this pledge part, and the company the group as a whole has made some wrong decisions in terms of investing into assets which probably haven't paid off the way they were expected. Particularly, I remember one case in point is the hospital business, which they've acknowledged. And some of the brand acquisitions probably seem, in hindsight, seem a bit expensive. But then that's part of management decision making, which happens to everybody. But what they've done is they've immediately gone out, repaired the damage, and then got out of it so that they don't get into a situation like what we have in Z, where you keep on dragging the thing and kicking the can down the road, and then that overhang in fact damages the texture of the stock much worse. But here, I think the fundamentals will catch up, and then they're cyclical to a large extent within the FMCG pack, as compared to some of the other more diversified product plays. So here you would probably see benefits coming in the second half. So I don't think you should be worried. Yes, the damage is severe. 13% 2 days is not something which is very easy to explain to any investor. But a long-term investor should definitely keep the faith right now.
Okay, long-term investors should keep the faith. Well, a lot of brokerages are not keeping the faith. As such, Citi has cut their target price to 340 versus 435 earlier. But on that note, let's listen in. Emami, remember, as we said, has sold 10% promoter stake in an attempt to pay their debt. Let's hear it out from the management executive director, Mohan Goenka, on what the plans are going ahead.
We have sold about 10% today. This has been sold by the promoters. This is primarily to reduce our debt. This would go entirely in reducing the debt. The buyers have been some of the marquee investors, both domestic and foreign institutional investors. This is absolutely the last tranche. The idea is definitely to reduce our debt, but after this we would be in a very, very safe position. I don't think we would need to dilute any further stake in Emami Limited. Total debt, as far as the promoter debt is concerned, our debt was almost 3,300 crores. After this stake sale, we would further reduce it down to about 2,200 crores. And our idea is further reduce the debt in the next coming months. We want to absolutely reduce it to negligible levels. After repaying our debt, the pledge would come down to almost 37%.
It's just astounding how the names keep changing. The story is still the same. Z Group, Gen Irrigation, Emami. And Prakash, good morning. I'm coming to the next one. Piramal Enterprises. Now, we're not sort of assuming or alleging that there is a massive debt issue over here. But the developments of the last couple of days tell us there's a reason why stakes are being sold in, some of the best Shriram Group companies, for instance. Piramal Enterprises, the stock, what would your recommendation be now?
And so, this is an interesting play. And I don't think it's very easy to kind of paint it with the same brush for two reasons. The fact that Piramal is cut from a different cloth is here, the investments into Shriram were not part of the core business. The core business, as the company very clearly said, continues to be lending. And that book, which we don't know much about in terms of the real estate play there. But that book could probably have certain, stress levels and stress points. And all this money that's coming back is only going to shore up their, solvency and liquidity issues. So, the fact that the promoters have gone out, done this, because they've not seen value getting created for such a long time in some of the investments, and it was a portfolio investment at the end of the day. They made money in most. This one didn't play out as expected, so they've got out of it. Now, having said that, whether Shriram was a good bet and, they should have got out, they should have waited, those are different issues, managerial decision. But I don't think Piramal Enterprise would have issues because they are still attracting a lot of capital from deep-pocketed investors. And we've seen that. And if that were to happen, I mean, they're talking about getting into fintech, which is with one of the biggest funds globally. And if those kind of things were to happen, there'll be a repair which will be very, very quick. And it's more sentimental at this point in time, but I don't think the damage is operationally very deep.
Okay. Well, I also wanted your thoughts on what's happening in the auto space. I mean, there's deep trouble there, right? On one hand, dealers are just not getting any finance, NBFCs are not lending. On the other hand, now there's this talk of banning of the ICE engines, etc. You think it's going to go from bad to worse for especially the two-wheeler makers, Prakash?
Sonia, it looks like a very knee-jerk reaction. It's suddenly Niti Aayog gets up and says, you got guys 2 weeks to plan this thing out. And of course, the debate is that it might take 3 to 5 months to plan. So here we are talking about putting a plan together, but the government also needs to plug a lot of other gaps. And I think that the policy holistically needs to become much more pragmatic, whether you want to do it across the country, you want to do it in tier A cities, which are actually facing a lot of issues related to pollution, make it more viable. We are struggling to have electricity reach so many smaller towns or have electricity full time in smaller towns. And then you're talking about completely banning ICs. It doesn't work so simplistically. So my sense is there will be a respite. It's just that there's a little bit of a pressure to get these two-wheelers to start acting. The positive thing about this entire landscape changing so rapidly is that it's no more 2022 that you will see this adaptation happen, Sonia. So the EV infrastructure is where I think you could bet on, charging companies which are making cables, wires, variable drives. That's the pocket that you should look at, but everybody will have to rush to them.
Okay, all right, Prakash, just hold on. More questions coming your way. But right now, let's just quickly go over the monthly telecom subscriber data that was released yesterday. Sonal has those numbers for us. Sonal?
Thanks a lot for that, Surbhi. Well, yes, it was reported during market hours yesterday, but quickly running through the numbers. Overall, the telecom industry has added 8.6 million broadband subscribers, which is the lowest in past 12 months in the month of April 2019. For Jio, they have added 8.1 million subscribers. That is second lowest since January 2018. That is because the rural subscribers, they have been lower at 3.9 million. However, the urban addition has been strong at 4 million subscribers. Moving on to Vodafone Idea, they have lost 0.6 million subscribers. That is the highest since they have actually merged, and this is the first decline in subscriptions that they are seeing since the time they have merged. Moving on to Bharti, they have added 1 million broadband subscribers versus 2.5 million addition that they saw in the month of March. That is also below Jeffrey's expectations of the quarterly run rate. Overall, Jeffrey says that they expect Bharti and Jio to remain focused on subscriber addition, but they also expect pricing to remain subdued in next 9 to 12 months. They believe that price hikes are unlikely in financial year 2020, and they expect 40% plus market share for Jio in FY21. However, they expect Vodafone Idea's market share to fall below the 20% mark in FY22, but Bharti's market share to remain steady at around that 30% mark. But overall, they expect competitive intensity in the overall sector, and that's why they're expecting more pressure in the postpaid segment. Back to you.
Okay, thanks a lot, Sonal, for that. So, Prakash, your thoughts here? I mean, it's nothing new. Competition is going to go up. There's pricing pressure. But there, the expectation is that RelJio would have 40% of the market in the next 1 year. For Reliance Industries particularly, do you expect more upsides?
So the base has been set, and 40% is as good as it gets in a business which is so competitive. And the fact that they've not had to bleed so much to reach this level gives them the advantage to get into operating leverage faster and in a very efficient way. But they will have to raise money, they will have to reduce debt, and I don't know, I keep on reading about this potential IPO in the next 12 months. And if that were to happen, some of the profitability metrics will have to improve, which means they will have to hike prices, and then that could be a relief of sorts to the other two players. But I think the stock is right now available at a level where RelJio is not again being factored in completely. So if it were to move back to that 1200 zone, it's already lost about 10%, I'd noticed. But from that 1200 zone, it could again move back on the back of some positive announcements in Jio. So I'm quite constructive on the stock. The refining business is where, the core business is where there's been disappointment, but retail and telecom for Reliance could actually do the trick, and quite positive that Jio could spring a couple of surprises in terms of walking that path very effectively going forward.
Okay. All right, Prakash, stay on. We need to take a break. By the way, the fall in some of the Asian markets is now accentuated. The Hang Seng, for instance, is down almost 1.5%. China, Nikkei, most of these markets are lower, as is the SGX Nifty. That's the Asian screen, all red today. We'll take a break and come back with the pre-opening rates.